Today is Tuesday, August the 20th, and we had a down day, and I'm not sure what the news was other than, the usual. Maybe there was something special that went on in the afternoon. I was busy doing something else after buying some GDX, which I'll explain in a second. But if you follow the same basket of stocks that I do, which is the ones that I do the charts on, you're up significantly this week. In fact, I was even up today thanks to gold and thanks to Whirlpool, and I think thanks to Apple too. Let me take a look. No, just flat with Apple. But decliners led advancers by about 2 to 1. The market in the Dow came down, hit its peak about 11 a.m., and then it was down all the way with a sharp sell-off towards the end. NASDAQ did much the same, so something happened around 11 o'clock. I have to do my homework and see what it is. You probably already know what it is by now. So that is going to take our market breadth, which has been chattering, but was over the zero line, probably back down to near the zero line. So money, maybe it was going into the market just a little bit too quickly, expecting, this kind of a, maybe this kind of a run-up. But we didn't have it. The last time we did, this kind of a run-up. Look at this one. We chattered all the way up. So who knows? We may be chattering up to overbought, but I wouldn't bet on it, and I'm not. But I am at 32% cash, which means I've been dipping my toe into some safety stocks, and I'm going to explain what those are. So let's look at the S&P, which came down to close at 2,900. But we said that we would find the market would find it difficult to burst out of this very large cloud, and that's what's happening. I thought as much when we were in here, but we popped out, came back in, dropped under to hit this head and shoulders neckline, moved up, but now we're clearly moving in a cloud, and the market can't see in front of it too well. It's going to take a move up 57 points tomorrow to hit resistance at this neckline of this head and shoulder, which you've been talking about, so I'm not going to go into it. Chiku span, nothing unique about the Chiku span. On the weekly chart, nothing either. So let's go to Apple, which was only up 3 cents. And finish today with this inverse hammer, which sometimes indicates a reversal. So the enthusiasm that brought it up close to the 78.2% Fibonacci dipped during the day. Let's see when it happened. Go into the 5-minute chart, and it was also at 11 o'clock. So at 11 o'clock this morning, something happened, and as soon as I hang up with you, I'm going to find out what it was. And then it made another attempt, but hit a lower high, then another lower high. And when you have 2 of those in succession, you can pretty much count on this happening. And that is what happened. And then we had a lower high, this one compared to that one, and then another one. And then that was just enough for the sellers or the buyers, and they just disappeared, and down we went. So what happened at 11 o'clock? I'm going to find out. You should too. Caterpillar down 69 cents. The 8 EMA is proving resistance, but I still think that it's a good stock. It's going to pay a dividend any day this week for holders of record way back in June. Of $1.07, I believe it was. So that's pretty hefty, and that's why I'm still holding on to Caterpillar. And you look at the declining volume, there's really no interest in buying, but there's certainly no interest in selling. Institutions are not selling because we can't even get up to the 20-day moving average. The last we saw of institutions, they were actually buying here and possibly here and here. I don't think that we can call this too much institutional selling here when you compare it to these 3 volume bars here. GDX, I took another position in GDX once it popped into this flat portion breakout of this pennant. Remember, pennant, flat portion, breakout. Pennant, flat portion. I'm waiting for the breakout. If the market goes down tomorrow, gold and GDX are going to rally, and it'll be time to fill up my position, and then I'll end up with 1,000 shares. I have 700 right now. Whirlpool is my nice little stock, and the reason I'm low on cash is because I kept rolling 4 130 calls, which did extremely well last week and gave me all of my money in my premium that I'd been collecting for the prior 2 weeks. So I said, what the hell, I'll roll them again just for 45 cents. But I'm going to buy another 400 shares because I'm pretty sure that they will get taken away from me. And that's what I did. So I know that those 130s are bound to be taken away from me on Friday, barring something really bad. And then I'll be left with 800 shares, which is about what I want to be. And I'll be back up to about 40% cash. We got resistance here on the 50 EMA for the Chiku span. But if you look at price, let me just get rid of this because the Chiku span did touch the 50, and that was the alert that we had set. But we came up to 38.2%. So we're 38.2% away from our previous high. So that was bound to be resistance, especially when it coincides with the Chiku span on the 50 EMA moving average. So I think Whirlpool can still do some good, but like the S&P, it's in the cloud, and the cloud is getting bigger. Those are words to a song, aren't they? And the clouds are getting bigger. Remember, here's a Head and Shoulders neckline. No, sorry, here's a trend line that proved to be resistance here and here and here, support here, but then resistance here. So that 50 EMA and the trend line and the 38.2% are all in the same place. So let's just put an alert right about here, right about 139. And I think that the convergence of those three things is going to be a powerful place for the stock to find resistance if, and I'm going to just put that little mark there, if, so we can remember it tomorrow, if the market doesn't do something really bad. Now, Walmart broke out of, yesterday I drew this little flag, didn't I? This little pennant. And I just based it off of this candle. You can see here. I just thought that this candle might form a pennant for us. And it went up yesterday and touched the top of it. It broke through it today, so this is not a good thing. I need Walmart to bounce tomorrow because now my position, which cost me $700 for 10 vertical spreads, and that's the most I can lose, $700, that position is now losing $110 for me. I'm going to lose 150, 180. So if we have another down day tomorrow, I will let you know by tweet what I decide to do, but I am not in a mood to lose any money more than a couple of $100 on this trade. Even though my max loss is 700, I can always get back into this trade again. And I can do it with 110s and 115s next time if I'm still bullish on the stock. Let's go look at one more thing, which we don't look at too often, and that is the SMI. Look at the cloud. The cloud on the 1 day for Walmart is going to be support tomorrow. So let's put an alert. Let's move this. Can we move that one? No, we can't because it's tied to this trend line, tied to that pennant line. Let's just put an alert here for Walmart. This is the last stock I'm going to cover, so if you want to drop out, feel free. On the Senkou span A. So I'm going to put this alert right there tomorrow of 111.40. Should be support like it was right here. We've also got this 110 for the top of the gap. So keep an eye on that. Yeah, we're going to look at these SMIs. This is Anne-Marie Trades on Twitter developed these particular numbers on the stochastic momentum indicator. And you can see that we're going into the overbought on the short term, but on the long term, the stock has bottomed out. It's turned blue, and it's starting to make a turn. So the long term says that Walmart should be moving up. We might see the short-term momentum indicator start to move down, but the long-term momentum indicator can continue to move up when that happens. Here's an example. So here's where the short-term indicator peaked, stayed up there, the stock plateaued, started to come down, but the long-term momentum indicator still continued to move up to finish its move between the two red lines. We haven't had this long-term indicator come down to the bottom since a long time ago. We haven't seen it since December of 2018. It's taken that long to complete its cycle and come back down to the bottom. So there's no need to rush to get out of Walmart. Our positions in Walmart are September 27th. So we've got a month and another week and a half. Hope you had a good day today. Tomorrow, don't